So, welcome to the Venture Node podcast. We are a Web3 community of founders who are looking to learn from each other by speaking to people who are currently in the trenches of their own venture. Join us today with our first guest coming from the Shine DAO incubator, the project Kassandra DAO. Nice to have you guys, and welcome to our first episode of this podcast.
Yeah, nice to be here. I'm Kevin. I'm the project lead of Cassandra, and yeah, I'm here to talk.
I'm Sharji from Cassandra as well. I'm a business developer on the project, and it's a real pleasure with you guys today. Looking forward to get all the questions and things.
Cool. So I thought we could start with a little bit about your guys' background in finance and crypto and how you got into the space. Just a little bit of history behind the project.
Yeah. So actually, I got to know Bitcoin very early, at least in my own opinion. I bought my first Bitcoins back in 2015, and at the time, I was doing in university, doing my degree in physics, and today I'm a physicist. So that's my academic background.
That's cool.
And so what happened was I saw Ethereum being born, and at the time I didn't give enough attention to those smart contracts. I took a look at it, but was by the end of 2016, in the first ride that Ethereum did, that we started to get a lot of ICOs and a lot of new projects building on those smart contracts. That really got my attention, and I decided that I need to get some time to really understand those things. And at the time, I was not a developer. As I said, I was in university studying physics, and I didn't got enough time to put and learn the things. But I got the money, and I decided to start investing. And so I got to invest in a lot of ICOs. And so I was reading a bunch of projects. I was looking, and there was a lot of developers creating very cool things, at least in paper. And then this grew inside me, and I decided that I must become a developer. So eventually, I started learning. I finished my degree in university, and yeah, so I started from this idea that creating is very cool, and creating a new project, especially related to crypto, is very cool. So I started a usual career. So I got to start a developer at a company that was not so related to crypto. And yeah, so that's my background. And for that, I started building cool projects. I built a couple of companies. And yeah, right now I'm here and I developing Cassandra and also Heimdall. So I'm here to talk for both companies.
Yeah. So my background is in finance. I studied economy at the university, and me and Kevin studied at the same university, but we didn't meet at that time. But what happened was that this university, which is the Federal University of Santa Catarina, is the first one here in Brazil to have a junior crypto in university. Okay, just a little lag. So at that university, we had the first junior student project of crypto in Brazil, which is called Crypto Junior, and they still running on producing very nice content, getting the people into it, and that was my first like real approach to crypto. It was in 2019, and there I met some people which were friends from Kevin, and for me, cryptos stood by for a little while because I got into TradFi. I was working with middle market credit for middle market, and trading options, stocks, and all this TradFi stuff. And then I moved back to one state to another. Got to live in São Paulo for a couple time, and got really involved with TradFi, and went back to Santa Catarina due to work opportunities, and then um for a real coincidence, I met again friends in common from Kevin, and then we got introduced to Kevin and joined the project too. Add a little bit of the expertise that I got from the traditional markets with business development, and that was my story back to crypto and so on. And since this very good coincidence from life, I'm now full-time crypto,
Awesome.
and here we are.
So would you say most of your team at Kassandra DAO now came from like that same university, or is it just most of the founders? And also, how does it connect to Heimdall Research? Because I know originally
Yeah.
from what I found, like Heimdall was like the project was going to be under Heimdall, but then you sort of changed it with Kassandra DAO. So what's the connection there?
So we are not from the same university, but there are a couple of people that went from those same university. And how Heimdall started was I was doing my developer. I was being a developer at a company, and I got very close to my boss at the time, and we decided to create a new company, and that was turned to be Heimdall. So my previous boss turned to be our angel investor in Heimdall. And we started developing. I was managing already the team, the previous company that was working with this boss. And so I essentially became a founder. We created a new team. And there's a couple of people that at the time were working at Heimdall when we decided to create Kassandra. So we got very, very close to those people, especially the developers. And that's a very cool thing, but we got to know some very good developers. And at the time that you met someone that is very good, you know that you must stay close, and whatever you will be building, you stay close to
Yeah,
those people. So that's the
100%.
idea. So we essentially built Handle, and at the time it wasn't the most successful business, and we saw this opportunity to create, and that was something that I always wanted to create in the decentralized world, so to create a Web3 project. And we decided to create Cassandra. And at the time, we had this quantitative analyst that was working at the Handle, and
And
he proposed.
maybe also for the audience, we could give a little bit of background as to like what Heimdall is, because maybe
Yeah,
they haven't
sure,
heard of it.
sure. So what Heimdall does, Heimdall is a social data company for cryptocurrency. We essentially listen for Twitter, and we categorize the people and see who are the most relevant ones. I could go a little bit deeper in the tech, and I would very much like to. But just an overview, essentially Heimdall is a social data company for crypto. So you can access Heimdall.land and see what are the cryptocurrencies with the strongest community. So it's very similar to CoinGecko or CoinMarketCap, but instead of looking for market cap, you will be looking for social strength, and that's what we call social scores. So this is what Heimdall is.
Awesome. Yeah, so actually, I did want to go a little bit deeper into Heimdall, because a little bit about me. I had some background in alternative data with equities, so I did some work there specifically over COVID, especially because of market volatility and all the social change that was happening. So I have some experience using like alternative social data sources, including Twitter. So I first wanted to ask you, like, in terms of social data
Yeah.
for investing, how would you compare the efficacy in traditional equities versus cryptocurrency or other markets? And like, why do you think it's so important in cryptocurrency?
Yeah, I think it's important in all markets, but something that really distinguishes crypto for the other markets is that community here is so relevant. So it's very hard to build a product without a community. And most of the projects know that, so that's the reason that community managers are so in demand right now. Trader Joe is a very cool example in the Avalanche ecosystem that has a very good community, and essentially the project is driven by the community. So this means to us that social is a very important asset, especially for cryptos. And more than social, what is really important is who are the people that are building your project and who is supporting you. And that's the reason why we believe in socials. We believe that it's one factor, and you should not invest in crypto just by looking for the communities. You always should look for other things. So is the team competent enough? Do they have enough money to do the project? The idea is feasible. So there's a lot of things that you must look first, and the social it's one bit of the whole, but it is important, especially in crypto. And I don't think it's only for crypto, but especially in crypto.
Yeah, and just to add a little something, because due to the time, the quite quite large time that I had in traditional finance,
Mhm.
Especially here in Brazil, we noticed a lot also the impact of social investing in traditional stocks. And I believe that this truly stands out because uh, having this ease of access to different kinds of data is something pretty much normal for crypto, right? Because
Right.
you got on-chain data, you can check everything in real time, and like in TradFi, you need to wait quarterly in order to update your analysis, and these like traditional uh, analysis ways of building a portfolio and things like that are like saturated. I believe they were extensively explored for a long time, and if you look like to
Yeah. Much more saturated
forex
in
traders and stock
equities
traders,
with other companies. Yeah.
and they pretty much have like two ways of approaching, which is like uh, graphical analysis and valuations and so on, which everything is looking at the same thing every time, and they also have this gap of information because they need to wait quarterly. And so I believe that this kind of alternative data, it's really the way for you to stand out in order to analyze the ecosystem as a whole and build a different strategy. And this is something that I've been talking about recently because I was watching a hedge fund manager talking about his quant fund, which is a very famous quant fund here in Brazil, and like the news of the interview was that they were adding social data to their quant portfolios
Right.
and like tracking traffic for web sales sites and so on. So um, and the Web3 and all the the technology that crypto has been exponentially developing uh, really leads to the possibilities for you to build some pretty interesting and smart ways of investing.
Right. Right. I mean, being a smaller player has so many advantages in this space, especially because like the huge hedge funds, they have so much overhead and so much that they would have to do to even catch up to like a basic thesis that a smaller player would be able to implement extremely quickly. So I think that's definitely a good point. Michael, maybe you want to jump in with the next question?
Yeah, sure, but just to quickly go back on Heimdall, I'd just like to ask what data sources does this index track? Like, does it track Twitter
Yeah,
or
yeah.
maybe something else? And just one other thing I'd like to add is I have heard of a few other I guess you could call indexes that rebalance of social activity in the traditional markets as well. From memory, there's an ETF called Buzz. Have you guys heard of that?
Yeah, I don't know the name yet that you said, but yeah, yeah, I took a look at it.
Yeah, it's essentially just an ETF that tracks a whole bunch of stocks on maybe like
Yeah,
Twitter and stock tweets. It tracks their activity and it rebalances. So it kind of sounds similar to
yeah, yeah. The
um,
idea isn't new.
yeah,
It's
yeah.
an idea that's very. In the past years, there's a lot of people that started to develop this idea, especially in the TradFi. And what we did, we essentially tried to do the same for crypto, and we had fact to do so. So this is how the social index is born. But getting a little deeper in the social score itself, and to clarify, Cassandra has recently issued the Avalanche Social Index, that is an index that you can invest, and you will be exposed to the whole ecosystem of Avalanche. The rebalance will happen using the social data from Heimdall, and we can go a little bit over that in the next moments, but right now what I would like to talk about is the social score itself from Heimdall and how it works. So the question about what data we are using to feed the social score. In the beginning, we tried to use a bunch. So we started to listening from news, from Reddit, from Twitter. And there's this problem on how do you quantify which source is the most important. And
Right.
it's very, very difficult to do so. So we decided to what we decided in science we get a little bit of the whole ecosystem, but it's a very good it's just a part, but it represents the whole. And we believe that Twitter is this source because most of the people interacting on Twitter and most of the social influencers have a profile on Twitter. And there is a very important thing in the social score, and that is if you want to measure how socially active a crypto is, you would probably start by just counting the social activities. So if someone tweets about the project, this counts as a point. But we don't see that as a good way to go because it is a brokeable system. You can break it just by creating a bot and tweeting a lot. So it's not the way to go. And what we see as the most important assets is the community itself. So people are more important than the amount of social posts that you have. So what Heimdall started building, and I was very involved in the process, especially in the beginning. Afterwards, or data engineering took over, and they did a lot of change and improvements to keep it as good as we could. But in the beginning, we decided that the way to go was to focus on community and focusing on who are the people that are socially engaged in your project. So one way to do that, and was how we started. We just connected to the Twitter API and listened for a bunch of cryptocurrencies, and we saw who are the people tweeting about each cryptocurrency. So let's say you're looking for some crypto, and you can see that there are 5,000 people tweeting about your project. This is a place to start, but you don't know who are those people, and especially how relevant each one of those is.
Requires filtering.
Yeah. So that was the next step that we took. We decided to implement a way to quantify how relevant each one of those persons are. And what we did essentially was to use a very known algorithm to doing so. We use the PageRank algorithm, and it is what Google used to use to rank the web. So when you do a Google search, you see the most relevant web page to that topic. And we did the same thing, but for profiles at Twitter. So we rank everyone that is tweeting about crypto, in which are the most relevant ones. And the way that this algorithm works is we look for centrality. So essentially, we look for who are interacting with you. And when you retweet someone or when you like someone, you are giving relevant points to these people. And essentially, this is how the social score works. So we see who are the people that are engaged with your project more than how many posts the people do. So there is a minimum, there is a threshold where you see you are an active member of that community, and afterwards you're just an active member, and you and someone else that is active, and we count you as the community. And this is what the social score represents. It represents the community strength of a crypto. So this is how it works. And yeah, only look for Twitter, but we think it's a very good way to represent the community of a project because everyone has a Twitter account. Even if they don't use so much, they will be tweeting at least one time about the project.
It maps the network effect of people introducing and categorizing the sentiment. And this that you just mentioned, Kevin, and talked before when he asked about the sources of data. I believe the word that you were looking for was a sample of the science concept. And I just wanted to add a little something, uh, but it's not quite related to the social square itself. It's just because on the past days I had a couple of meetings with some people from the TradFi that got interested in Cassandra. And as you mentioned, the Buzz ETF and all this stuff, there were two things that these guys were like super hyped, which are things that curiously we don't focus on advertising them as a marketing at Cassandra, which is like something natural for us at the with the crypto tech available. But there are two things that like revolutionizes in when you compare this to a TradFi ETF, which is a consequence of the non-custodiality of the Cassandra DAO. For example, leaves the chance for the investor to withdraw all the assets inside the ETF if he'd like to, which is something like that would be quite hard to implement in TradFi. For example, if you have an SPY ETF, there's no way that you can withdraw the one by one assets with the proper allocation of the fund. And that was something that for these guys, they were like, oh my god, you can't do this, you can withdraw all the tokens if you want to.
Yeah, that's right. I also just talking about the TradFi ETFs. I would also assume that the barrier to entry to create such an ETF would be extremely high, right? But when you're looking at creating similar products in crypto, the barrier to make a smart contract or to deploy one would be significantly lower, right? Right now, crypto it's not quite at the stage where we can have such a large amount of assets, such as stocks. But I think there are a lot of people working on that, synthetic stocks and other derivatives. In the future, I think once certain problems related to liquidity and oracles, and once a whole bunch of hurdles are passed, we'll have a huge amount of assets that someone like a DAO like Cassandra, for example, will be able to utilize. So yeah, I think that's pretty exciting.
I had a couple of questions going back to like the data sources and stuff like that. So the first thing I noticed that you said that I thought was very interesting was kind of the idea of like finding the best data source, because you said you started with multiple data sources for the social index and you sort of decided to focus on Twitter, which I think is a good idea because I find a lot of the time, adding all those other data sources can just cause more noise and honestly more headache than benefit, even if you can catch a couple more investments. But I guess the other thing I wanted to focus on as well is I know social data for entering positions is extremely, it's much easier to track and to identify, like, oh, there's an upwards trend on this specific social metric, so interest is gaining and the cryptocurrency will likely do well. But I think for exiting positions, it can be a little bit more difficult because maybe the social interest peaks after the token starts to decrease in value or something like that. So how do you find like entering versus exiting positions in terms of the use of social data?
I agree with you. And the back test that we did said the same that you said. The entry positions by socials is very obviously, you can see the community growing, and something that you saw a lot, the community a lot of times grow before the price starting to grow. So there's something, this is something that is really cool about the social index, is that we are really do be able to measure the communities that are growing and before the price starts to grow. And that's very cool. But as you pointed, exiting the investment is very different, is a different story. And being 100% honest, the social index doesn't do that well. If you backtest, you can see that the social index loses money when the market starts to go a little bit down. And if you, yeah, the assets itself, let's say that Bitcoin and Ethereum are going down, the portfolio will be hurt, especially because it is the exposure are to other assets that are way more volatile than the market. So that's something. And I really don't believe that we would be able to create the perfect strategy that always going gain money, and that doesn't exist. The strategies works in some specific time. And the way that I see that is that the affluence social index or any kind of social index should be looked as a tool. So it isn't a way to just invest and earn money. You still need to do your own due diligence of the market, of the project, and everything else. So when you believe that you are in a new rush of the market, the social score really do beat the market. But this isn't true for all the moments. So this is how I, Kevin, see the social index, and the back test that we did showed the same. So it doesn't perform the best all the time, but at sometimes it really do beat the market. So we still need to use it as a tool, and not just don't just buy and forget it. Yeah, I mean, probably could. The problem is that we don't have enough backtest data, especially because the Avalanche ecosystem is so new, to really say that, yeah, in the long term the gains will be bigger than the losses. That's something that we can say, and the only thing that we can say is when the markets are going up, the Avalanche social index is a very good investment, and when they are going down, it is not so good. But it's up to you to decide when to invest and when to withdraw.
And since the social index went live on mainnet, we obviously started tracking its performance. And as for these questions, we noticed some interesting things. And as Kevin said, it actually got ahead on allocations of token that pumped the price later on. And as for the exit, a way that I started seeing it is that sometimes new entries like surpasses the exit of others. So perhaps we can, of course, look both ways, but you can have this in mind that new entries will come and will surpass this prisma of looking towards the exit of other assets. And these past days that we are already live, we noticed some pretty smart reallocations that the pool made, like drowning down the allocations of certain tokens that went further down than the others, like a couple days later, and also for the upside doing the same thing, increasing the allocations on tokens that perform
Yeah, the most
a little
recent
bit
one
better than
in
others.
the deployed contract was starting to allocate more money on Crabata, and I think from the launch to today, and it is I think less than 7 days, the allocation essentially doubled. So we went from 1.5 to 3, and Crabata in these last few days really do appreciate it a lot, especially the day after the most drastic reallocation for Crabata. And we are not trying to say that it will be always working because it is not a perfect tool, but it is a way to get exposed to the most growing community. So besides all this idea of the best performance, I really do think that being exposed to community is a very good thing to have in your portfolio. So even if you don't want to have your whole money in it, having a small bit of your portfolio investing by socials can do perform well, and it is all about risk management. So you have your own portfolio. If you're diversifying a bunch of strategies, and that's something that Kassandra will be looking to build, a lot of strategies with different value propositions, you can create your own portfolio in the end and have when someone is working and other things are not, you'll be always have some kind of gains in the end. that's an important thing to mention. Kassandra is not really all about the socials. Kassandra is a bigger project, and we plan to release new strategies of investment. And the social investing was just the first one. And we really do believe that it works, and we show with a couple of backtesting Medium posts. But it's just one strategy of many that we'll be building.
Okay.
Awesome.
So I noticed that you guys did choose to launch on AVAX first. Can you guys go into detail why you chose AVAX first, and maybe what your visions in the future are for being a chain agnostic protocol?
Yeah, so what happened? At start, we
Yeah.
planned to launch on Ethereum. And yeah, the fees and all of those things were definitely relevant. But I must say that this wasn't what made us launch on Avalanche. What really did it was that we had applied to a bounty on Avalabs, and we got in touch with the people from Avalabs, and they really liked what we are doing, and they provided a lot of support for us. So especially more relevant than the whole more efficient, less gas transactions and everything else was the community on Avalanche. So we saw an opportunity for being more relevant. There are less projects, there are less. It's a more welcoming community in a whole. So Avalabs, we took many chats with them. The guys from many projects, we got to get in contact with them. We changed messages. We did a bunch of meetings. So the really thing that made us launch on Avalanche was community. I really do think that community Avalanche is something else. I really do think that those guys are very different from the others. But yeah, the other thing, and this is the most obvious one, were the fees. So we are not the biggest protocol launching, and especially if you are looking for invest some small amounts, Ethereum fees right now are way too high. But if you decided to not launch on Ethereum, we would still have a bunch of options. And the decision to launch on Avalanche was the idea that the community on Avalanche is much more welcoming than the others. And the guys on Avalanche were seeking for a protocol that could manage assets. And that was what we are building. So that's the fit with us and Avalanche.
Okay.
As for the social index, this is not financial advice, but I myself changed all my AVAX to AHype. Because the currently AHype is more than 70% of its allocation in AVAX itself, and we currently have some very nice APRs there, and so as Kevin mentioned, and I made this little disclaimer. This is a personal opinion, and because that's really something that throws me in, and I believe that this is what got me in the team as well. Because the first time I met Kevin, he was telling me the idea behind and the further plans, and I was like, oh my god, damn, this looks really nice.
Yeah. No, yeah. I mean, I think, because personally, I've launched a project on Polygon in the past, and I think for similar reasons as well. You know, the Ethereum fees were too high. It's a much lower barrier to entry, and then you also have the support from their community, a lot of access to promotion and stuff like that, which I think is really big. And I think it's really interesting how it's kind of, I mean, in a way, fragmenting the community, because I think a lot of developers choose to launch on different chains. But then it's also interesting how a lot more projects are becoming more chain agnostic and willing to launch on multiple chains after the initial chain that they decide to launch on. So in terms of launching on AVAX, I know specifically with Polygon for me, we did have a couple of hurdles, a couple of things that we didn't really expect to come up. So maybe you guys had some similar experiences on AVAX. Were there any things that surprised you? Maybe you had huge community reception that surprised you, or maybe there were some issues with the chain that you didn't expect. Was there anything that came up?
Yeah, hurdles, I don't think so. I must be forgetting something because it's the way that I look for things. I especially look for the thing that did well. But yeah, I think one thing that is worth mentioning is Cassandra was announced before we announced that we will be launching on Avalanche. So at the start, we planned to launch on Ethereum. And at the moment that we changed and decided to launch on Avalanche, Discord server, we received a lot of members and the discussions started to building at that moment. So before, there's not many people to not say that there's any. And after that, we say that we will be launching on Avalanche. A couple of people got on Discord and started to asking questions. So as I said, the community on Avalanche is very good, and I do think that this is the case for other options besides Ethereum. And Ethereum is really the big game. And if you look for the big TVL, you should be looking for Ethereum, and that's the reason also because that we plan to be multi-chain, because we can just don't want to launch in Ethereum because when we started to growing, it will be justified. And so yeah, that's what I think. And I don't know if George has anything to say about the hurdles that we have and changing from Ethereum to Avalanche. I don't think there are many, but
Well,
do you remember something?
uh, as for technical parts, I think this is more with you, but the AVAX community has really been very receptive with us. We actually still in the process of building our own community, but since um, we released our demo page and since we got on mainnet, we've been getting in touch with some really nice people, and this podcast, for an example, is a result of these interactions, and especially for me, changing from the uh, TradFi environment to the crypto environment. This is something that really gets me hyped up to work every day, to give the best every day, uh, because you can find some very nice exchanges in all kind of senses, like people willing to help, and something that I think worth mentions as well, uh, that I personally never had experiencing something like this before, is that uh, we kind of get uh, like ambassadors of the brand, and this is something really cool. Like we're already started to see in our social media, like when someone tries to just get in and FUD the whole thing, they're our uh, community ambassadors. They're also putting real effort towards the project. So these are some really nice things that been happening since the launch. And as for hurdles, and as mentioned earlier as well, uh, we are chain agnostic, so we don't have to like, oh, this is the best chain ever and that is the worst chain ever. But recently we saw some little delays at the Avalanche, but it's something that happened in other chains. Another chain that I personally like is the Phantom chain. And today was a day that it was really slow and the fees skyrocketed. So yeah, I believe
Okay.
having also this multi-chain approach um, helps us to have a more like sober idea as well, in order to truly look at what works and what don't, and develop the whole crypto ecosystem.
The thing that connects those chains is that everyone is running their own EVM.
Yeah.
So if you use smart contracts in one chain, you can just deploy the same in the others, and that's very good because most of those chains have some specifics. Have you can also say that those chains have somewhat of a regional community. So if you look, Avalanche, there are a bunch of guys from Turkey. Polygon, there are guys from India because the founders of India. Um, Binance Smart Chain. There was a bunch of guys from China. So there are some difference in those chains, and it's very good to have the ability to be in all of that. Because I do know a lot of people that just working in one single chain. And also for Cassandra, one thing that is very, very good to be multi-chain is the ability to bridge the investment funds over the other chains. So one very cool idea is, let's say that we bridge with Ethereum, it would be our second chain. We'll be able to get the Avalanche social index in Ethereum. So people that don't want to don't have the credential, don't have the wallet or anything else to be on Avalanche, they could just buy the Avalanche social index in the Ethereum and get exposure to the ecosystem in Ethereum. So let's say that you don't believe in the security or anything else, but you want to trade it, you can just buy it on Ethereum. That's a very, very good thing to be able to do.
So, so throughout the launch process, I mean, maybe there weren't any issues on chain, but I know specifically with my project and my experience, it was extremely nerve-wracking, deploying the token and getting everything out. Were there any other things that you learned from the launch process that didn't go that as expected? Not necessarily in terms of the chain, but anything else?
No, actually, it didn't happen. So as I said, the guys that we are working with, we are shipping software for a very long time.
Got it.
And we really do know the process itself is very established. So the way that we build was already established, and the code review and everything else, we know each other and we know how to work together. So there weren't any kind of hassle. And when you ship software to production, I do understand that crypto is a little bit different, because if you deploy the tokens and anything goes wrong, you have this responsibility. But when you do ship code for a big project or anything else, it's kind of the same. You don't want to the things to went wrong, so you establish this process of reviewing, of doing things in pairs, and never working alone. And this makes that the change from developing in a more centralized ecosystem like what we did at Heimdall or anywhere else wasn't so much of a change when we decided to ship code to production in Avalanche. So yeah, I would not say that our hearts then start to beating a little bit faster because it is the time, but it wasn't a hurdle. There wasn't any kind of issues. Everything went smooth. But yeah, it is what it is.
Yeah. So you think
Yeah.
having experience with the team beforehand, and then also really working together, double checking, triple checking code, that's really what allows it to go smoothly.
Yeah. So I do think that this is something that can be happening in any project. So you don't need to know the guys that you're working with to do those kind of things. But the point is that we got some maturity for we got to know each other, and we define those things. But if you have a good team, you have a good team. So I think that's the most important thing to highlight. And yeah, are the little things that you learn in the process of building things. And yeah.
And besides that, who got early in crypto and still here, gotta have nerves of steel.
Yeah. Yeah.
Yeah, that's maybe other thing. As I said, I was investing in ICOs back in 2016, and at the time, the way that the ICOs went in 2016 were very, very different from what IDO is right now. The security is much lower. You buy the tokens, you don't have automated market makers to trade the tokens. You must wait until some exchange lists the tokens. So there's a lot of just clicking the button and everything will happen back in 2015. And at that time, I wasn't even a developer. But when I shifted to be a developer, I think that those experience helped a little, especially when I started developing in crypto. So this idea that when you press the button, it will be live and unreversible. I think that's also happened in back in 2016 when I was investing in ICOs.
Okay, nice. I think the next question should be related to the DAO structure that you guys chose. I'd just like to ask, how involved would you like your community to be? And do you see it as a possible issue DAOs in a whole would be the overall quality of the community. Because if they have a say in certain proposals, yeah, it would be important to have a high quality community. So maybe you can go into detail about that a little bit.
Yeah, that will be a slow and steady process. We'll be onboarding community in the decision process, and that will be done by the staking rewards essentially. So most of our supply will be give to the community, but it will not happen in the start. So if you look to the token distributions, the time the foundation and the team are who are holding the most part of the voting power. And so it will be a gradually process of letting it go and letting the community starting to take over the Cassandra itself. And that's something that we plan on. We don't want to Cassandra be something centralized. We really do believe that not only the governance of the invest funds must be decentralized, but the whole protocol must be decentralized. So what I mean by that is it's that we will be working on that. The governance interface will be live in the next few months, and people will start to being able to interact with it, to giving proposals. But being 100% honest, the decision, especially in the beginning, will still be somewhat centralized in the foundation because we hold the majority of the tokens. But with the months and the years, we'll be starting to get less and less voting power compared to the community. And that's when we do think that the community would be mature enough to take the best decisions. So it will be, as I said, a slow and steady process of letting go, to trusting the community, to really ensuring the community is ready for taking the decisions. But important thing to also note is that the foundation will never let the community work alone. So one of the goals of the community is to support the DAO forever. So at least for whenever we got the money to doing so. And that's the idea. The foundation will keep building, and what will be happening is that the DAO will say to the foundation what the foundation should build. So the DAO is much bigger than the foundation, and especially in the future, the things that we will be building and our development team will be building will be all governed by the DAO.
But so far, I believe Kevin focused a little bit on the technical decisions of the future of the protocol itself and so on. But so far, as for other aspects of Cassandra itself, such as for design, branding, and all of marketing actions and all of these other details, we have been truly community driven. Like, we're every day at our Discord and Telegram talking to people. I get DMs, I read the DMs, I talk to people. Sometimes even when I'm with a little bit of insomnia and it's different time shifts, I'm there. There's always someone there, and we really take note of all the suggestions that they make. And so far, this is starting the process that Kevin mentioned in a really nice way.
No, yeah, and I think you mentioned it well earlier too, when you mentioned, people on Twitter already are sort of responding to people who are causing FUD for you and stuff like that. I think that's one of the most interesting and fun parts of being in crypto, is that the community becomes really involved, and I can only imagine with a DAO it must be even more involved than just a traditional like token holder or something. So I think that's really cool. And I'm excited to see how DAOs evolve over time. So going back to more Cassandra specific questions, what bottlenecks have you found when implementing DeFi money management strategies on chain? I know it must have been difficult to get multiple data sources with oracles, stuff like that. What are the issues when getting these money management strategies on chain?
Yeah, so we still get a lot of things to fix. And what we did, we shipped the code that was able to do it, but it was not perfect on doing it. So especially when you start to take a look at money efficient, so you don't want your money to be sitting without any kind of revenue. and also liquidity when you're exchanging assets. You want to sell an asset and buy an asset and allocate the portfolio. You always want that to happen with the last amount of money to be lost, because always will be a loss when you decided to change an asset for other. There's price impact, there's slippage, there's anything else that will hurt you. And in that sense, what we did, we didn't build the perfect protocol, and we already started building Cassandra V2. So that's something that we haven't yet announced to the community, but we have a team that is right now researching what we can do the best to start managing the money.
Awesome.
And that's something, the protocol right now, it's kind of a proof of concept. We keep the things simple, we keep the things safe, and we focus on security. We have been audited by Certic, but it is not what Cassandra is really capable of. And in that sense, we already started to researching, and not yet developing, but researching and getting the ideas in the paper to building a new protocol that will be more efficient than the previous one. But that's talk for the future, and as I said, this is still not yet announced. But related to oracles, I got to know that what really Cassandra needs for our oracle solution is not related to price feeds. We don't need price to relocate the assets. The way that we work is that each investment fund is a liquidity pool. So we have the assets, and anyone can exchange the asset, and we count with the people to do the exchange and swap assets to keep the pool balance. So when you look on how we work under the hood, we work very closely to what a Dutch action does. I mean, when we want to relocate the money, let's say that the pool itself wants to sell AVAX. What it does is it slowly starts to decrease the value, or sorry, if they want to sell, they will be selling, yes, decreasing the value, so selling cheaper and cheaper, slowing with time, and we do it in a very smooth way over 24 hours. And when someone says that, yeah, that's enough of opportunity to take, and I'll be buying AVAX on Cassandra and selling in Pangolin, the people do. So this is how Cassandra rebalance the assets. We don't do the rebalancing in an active way. We do it passively. We do this Dutch action thing, and this is how we work. In this sense, we doesn't need in the core any kind of oracle solution to provide the price, because those the relocations are the people, and the people ensure that if there is any kind of price difference, so yeah, the arbiters can take some profits, and that's how it works. But we really do need Oracle solution to implement the data from off-chain to on-chain related to the management. So we needed to make the Heimdall data available on-chain. And the history behind that is that we got in touch with API 3 even before starting to building Cassandra, because the idea was really cool for Heimdall itself, to letting the data of Heimdall available for anyone to use. And in the middle of the process, we decided to build Cassandra. So what API 3 does that is very different from any other Oracle provider is that they are first-party managed. And what this means is that the Oracle infrastructure itself is not run by the centralized network, but is run by the provider itself. So who provide the on-chain data for Cassandra is an air node run by Heimdall. This isn't a problem. It would be a problem for price feeds. So you don't want the price feed to be centralized. But when we look for Heimdall data, only Heimdall do what Heimdall does. And if you don't trust Heimdall at first, you shouldn't be looking for the data of Heimdall. So this is what API 3 does, and it is one of very important part of us. And it is we with API 3 we are able to connect the data from the outside world, and this means the data from Heimdall with on-chain. And this is the Oracle that we need, and the only point where we need the Oracle. Yeah, I think there's Oracle need for us.
Yeah, no, I think that's interesting also because Michael has the project that he works with has quite a bit of experience with oracles as well. I'm not sure if you have any follow-up questions about oracles, Michael.
Yeah, so I have worked with oracles in the past. specifically, I've looked into Chainlink oracles, and we noticed that there are a whole bunch of issues with those oracles, like they update per block, so they're not that efficient. You cannot, the Chainlink network as of now cannot handle a large amount of price feeds. It's why you see projects such as Synthetics only hosting like around, maybe I think it's around 20 synthetics. And it's not because they want to host 20 synthetics, it's because Chainlink actually cannot handle more price feeds. And then the update times of those price feeds are quite slow as well. So I did think it was interesting how you guys chose API 3 as an Oracle network. So yeah, maybe you can go into detail on why you chose API 3 over all the other Oracle providers such as Chainlink, and go into detail on yeah, like how Cassandra can benefit from these oracles.
Yeah, also in that sense, API 3, in the couple of next days, they will be releasing a Medium article about how we use the node solution.
Oh,
so
okay.
if you want to get into details, there will be this new Medium article posted by API 3, getting in how we use them. And we are working together in that, but the channel that we choose to post it will be in the API 3 Medium, and that should give a little bit more of background on how we work and anything else. But why we choose API 3? So as I said, they are the only that are working with first-party managed Oracle, first-party managed servers to Oracles. So this allows the handle itself to handle the Oracle provider. And the thing is, any other Oracle solution right now is focusing especially on price feeds, because this is more important data for the five protocols, especially for lending, and well, there's many. And different from those other applications that need Oracle, the Cassandra doesn't need all the extra security that having a lot of validators verifying the data to make sure that the ecosystem is safe. So what I mean by that is, even if the AirNode solution is compromised and in some way someone took over it and sent false data for Cassandra, what they can do is just change a little of allocation inside the pool. So we have this maximum of 2% of reallocations that the pool can do. And it also will be happening over 24 hours. So even if someone handled get in their node and change the allocation that will be provided for the strategy, in the end, no much will be happening, and there is no way to be draining money from the strategy. And that's the point. So we don't need the extra security of having a lot of validators for the handle data, because it is not so crucial for the operation itself. And also the other thing is that its API 3 is very cheap compared to any other Oracle. So it's easy to run, it's cheap, and it really does the job that we want. And also for the future, integrating with API 3 is very great for us, because they have a lot, and when I mean by a lot, is a lot of data feeds available. So we can get data from the traditional markets, the weather, or anything that we want. They have a bunch and a lot, I really mean a lot, of data feeds available, and at the time they are ready to connect with us, and it is a scalable solution, so we can just connect with them and start a new strategy. So we are developing right now, we already have our quant analysis, but we are really building our own quantitative analysis team. And at the time being, they will be starting to research some new ideas from the next project they will be launching, and having a lot of data available to work with is very important. So this is a very good thing from API 3, is that they ease the process of connecting your already existing API in the Web 2 with Web 3. So the process is really smooth. So if you already run any kind of API in the off-chain world, you can just turn your data on-chain in a very, very smooth process. So this is especially the reason that we choose to work with API 3. The first one is that the strategy itself doesn't need the extra security of having a bunch of validators. And API 3 really do ease the process of getting a lot of data available on chain, and this will be very helpful in the future for Cassandra.
Cool. Well, I think as we wrap up the podcast, I think something that we could end on that could be interesting is, I know you mentioned with API 3 there are a ton of different data sources. Do you have any like sneak peeks as to what other strategies you all are working on, or you said you're hiring more quantitative analysts, sort of what's coming down the pipeline with that?
Yeah, sure. So the next one is already kind of released. If you look at the website and you see our roadmap, there's a little bit of sneak peek of what we are trying to do. And essentially, what I can say right now is that it will have Bitcoin, Ethereum, and some kind of stablecoin. And the strategy itself, it's yet not announced. But we are working with some guys from other protocols inside the Avalanche ecosystem. And I do think that community will enjoy that because first, it is exposure to the three assets that most of the people have, Bitcoin, Ethereum, dollars. And it will have some kind of boosted rewards, but I don't mean boosted rewards in the sense that the rewards will came from Casey tokens, but it will came from other source. And this is yet to be announced, but the idea is there. And the next ones are all still in the early stage. We are validating a couple of ideas, but I can't say anything because ideas come and go, and we really do need to test it out before announcing. So if I say to you what we are testing right now and we decided that it's not profitable, it would not mean anything. So yeah, I think that's what I can say right now.
Okay, nice. I would like to quickly ask, maybe you could just outline your guys' 5-year vision for the project and how you see Cassandra evolving over the next 5 years.
Sorry, I think the audio got a little bit.
Oh, okay.
bad.
Sorry. Yeah.
Can you repeat?
Yeah, I would just like to ask if you guys could outline the 5-year vision for your project. So just to see where Cassandra will evolve
sure.
to in the next 5 years. Yeah.
Sure. So we decided to start with those curated tokenized funds. But this is not what you're really looking to. The idea for Cassandra is really to connect managers and investors, and this means in the whole meaning of that. Really think that this is something that already exists in TradFi. You always have managers. Managers have more time, have more experience to manage their money. And you have people that just want to let the money be managed by experts. And Cassandra will work to be this middleman, connecting the managers and connecting these investors. So the way that we decided to start is to creating our own tokenized strategies, to building our own quantitative analysis team. But we do really understand that this is not where the big money come from. The big money come from reporting strategies that are already running in the TradFi world, or let's say even in crypto, but in a more centralized ecosystem. And the idea to connect with those funds to understand what they need and to provide all the technicals to then support these strategies to the blockchain world. So to ease the process of letting people invest, I mean, withdrawing money anytime that the investors want is something that they really do appreciate. And this is what Cassandra will be aiming to create, is really to ease this process of connecting investors with the managers. And also, there's other important thing that is on the roadmap is that we really do think that community also can create their own funds. So we will be creating this interface where community can create their own investment fund and let anyone invest, and even create their own discretionary allocations. So if you want to relocate money from one to another, you don't need to have this quant model. You can just do it by clicking some buttons. And this is in the 5 years roadmap. And I don't think we are able to answer the 5-year plan for Cassandra because this market is very, very new. DeFi itself doesn't even exist for 5 years yet. And in that meaning, what we do know is where we want to be. So Cassandra aims to be this middleman between the managers and the investors, and Cassandra wants to be as decentralized as possible. This means DAO, the non-custodiability, the permissionless way that we do to invest into our money. And I do think that is our vision for the long term. It isn't a 5 years roadmap or anything like that, because what we'll be doing, we can plan a year, but 5 is very, very distant from us right now. But I think that's my vision, at least, and I think George can also say what he thinks.
Yeah, I truly believe also in this idea of being an entrance gate for the fund managers, especially with the past meetings that I had this week. Also, this week we were invited by multiple TradFi managers that really popped their eyes with this possibility of hedging and managing funds in this way, um, especially when compared to all the bureaucracy that you have here in Brazil to manage a fund, and so I could literally see in the eyes of like guys who are managing uh, thousands of millions of reais here, that they were like, oh my god. And that's why I also mentioned the withdrawal part as well, uh, because for instance, as for the some guys that I talked, they uh, are from a big bank here in Brazil, one of the largest banks here,
Mhm.
and he was telling me all the difficulties that uh, they are having trying to establish a fund to invest in crypto, and like all the bureaucratic parts. Oh, we can't do with the legal part of hedge funds and so on. And meanwhile, they are every day getting calls from investors. Oh, I want to invest in crypto, what should I do? And they want to implement their models, to implement their strategies. So I really believe that Cassandra can be this entrance gate for both of the words. And yeah, as for the brainstorms that Kevin mentioned, actually this part of talks inside the team are quite interesting. He didn't want to talk, but we have some very degen ideas, some more conservative ideas, and I believe as for the next steps and for the next years, we could be um, providing a very nice and easy investing experience for literally everyone who wants to get in crypto, with literally every background. And yeah, I think that's it.
Awesome. Awesome. Well, I think that's a good place to end. It seems like a very exciting road ahead for Kassandra DAO and everything that you guys are working on. I'll leave your contact information, any information about the project in the description below. I know you also mentioned a couple articles throughout the episode. I'll try to link those down there as well. But thank you guys so much for coming on. Hopefully you enjoyed the first episode of our podcast. And we're
No, it was
excited to get more episodes going in the future.
sure. It was a real pleasure being here with you guys today, and thanks a lot.
Thank
All
you.
right,
Yeah,
thanks,
thanks for
guys.
having us. It was really nice to talk with you guys, and probably see you soon. So yeah.